Good morning, everyone. It's Friday, June 28th. This is Liam McMahon with your daily moving average video. It's going to be the daily moving average video and the morning digest combined into one video for today. So, quick recap of overnight action. Asian markets all green last night. Nikkei jumped 3.5% as the yen continued to weaken across the board, so yen pairs higher. Hang Seng index in Hong Kong up 1.78%, and the Shanghai index recovered 1.5% after its sell-off earlier this week. European stocks are mixed. The FTSE is up about 0.1%. DAX is up about the same. The periphery, the French markets are down about 0.2%. The Italian market's down 0.4, and Spanish markets are trading up about 0.15%. So kind of mixed here before the open. Not too much on the calendar for today. We do have Canadian GDP later this morning during the North American session. That will be really probably the highlight of the day. We have Chicago Purchasing Manager Index and the University of Michigan Consumer Confidence. Also later today, we'll see those may have some sort of impact. But somewhat light finish to the week. So we're going to review some of what happened this week and take a look at some of the setups that we see for next week. Please take a moment to review the risk disclaimer. Should be now on your screen, and then we'll jump to the charts. Alright, so this is dollar yen on the daily chart. We are beginning to peek our heads above this 50% fib, but whether or not we close above there will be another question. But we are starting to push above 99 as well. We're currently trading right at 99. I think we hit 99.06 was the high, maybe 99.07. So certainly daily close significant here on dollar yen. From a moving average perspective, we are above this 50-day, we're above this 100-day, we are above this 200-day. And it seems like that now we're looking only at fib resistance. That next level of major fib resistance, assuming we close the day above this 50% fib, would be the 618% fib at 99.94. So basically it's called 100, which also corresponds nicely with this potential right shoulder. All right. So 100 remains a key level here, for next week, about 100 pips higher, which really, for the yen pairs, is no great move. So keep your eye on that, especially depending on the close. Had a request for pound yen approaching resistance, fairly significant resistance at 152 here on the daily chart. Combination of this descending trend line and this sort of putative neckline, I suppose, sitting at 152. We broke it here, we retested it, we had it lower. Propped up pretty well by this 100-day EMA. You can see that that moving average was significant here, significant here, significant here. Even though it didn't touch, I'm giving it credit. And here we touched it a couple times and then pushed back above it. We're actually testing the 50-day right now, which has actually been good resistance of late. You can see we wicked above, couldn't close, wicked above, couldn't close, wicked above, well, opened above, closed below. Wicked above, couldn't close, wicked above, couldn't close. Didn't quite make it, and now we're testing it again. Alright, so really since 20th of June, 8 days of sideways here underneath that 50-day EMA. So another day testing it, certainly. A quick move up towards 150, 150, 152 today. Wouldn't really stun me, and then we would see whether or not we managed to close above that level. 1 hour chart gives you sort of a general idea. Actually testing some light 1 hour resistance right now. It looks like kind of just above that trend line, but certainly no convincing hourly closes above it. Hourly moving averages looking to become bullish right now. They were mixed here. They became briefly bearish, and now they're looking to become bullish again. Hourly moving averages have not been as helpful on pound yen as they might have been as the pair continues to trade in sort of a violent range back and forth. Had a request for silver. Don't particularly care for silver as a trading instrument, but I will take a quick look at it. Very similar to gold. Had this ascending wedge pattern, which usually leads to an upside break. This time led to a downside break, and it just looks like it's going to continue from here. Certainly rallies up to 21 are selling opportunities. Weekly chart, these previous lows here, 1732. That would be the level to watch for potential double bottom or something like that, where bulls can at least find some sort of support to hang their hat on. But really, if you're buying silver down here, you're a braver man than I. Not that it couldn't work. It's just, I don't know, just why bother? It's the metal has just been being liquidated since the 19th of November of last year. We're down from 33 to 18. Just not a great interest in hopping in front of that. Ditto goes for gold. We are approaching some significant support on gold, but still, I mean, pair's been liquidated since we hit 1800 back here on the 1st of October. We're down $597, I guess, since that October high. And certainly, the monthly, I posted this monthly chart a couple times. This is where the support comes in. All right, so from the start of this move here from 340.60 back in God knows when, August of 2003, I think. So basically the move from 340.60 to the 1923 highs back in September of 2011. We're about to test the 50% fib as well as the 100-month EMA. All right, so that's a level that you certainly want to pay attention to. We'll see. Again, same rules with gold as with silver. There are support there. There is a lot of support there. Just no real interest in me for just trying to bottom pick it right now. Aussie dollar. Let's get to a more useful chart on Aussie dollar. All right, so Aussie dollar here, still a very decisive gap between the 50-day EMA and price. This whole area here, when there's this big gap like this between the price and the key moving averages, makes me a little edgy. To me, suggests that the move is overstretched and we need some time to consolidate and let the moving averages catch up. On the other hand, I tested that 38.2% fib from 96.63 down to the 91.42 low, 91.47 lows, very perfectly, almost to the pip. 38.2% fib is the continuation fib, likely to go lower from here. We'll see. That's not what I want to do, sorry. Hourly chart, posted this one on Twitter. Very nice retests, very nice 50, 100 EMAs here, pushing lower. Do need to clear these lows at 92.15, and then 91.47 would be next stop, and then to new lows. So keep your eye on that. Euro dollar, all right. So from this move here, 131.51 down to 129.79. Let me correct this drawing a little bit. Okay, we did push above that 50% fib. Couldn't really put anything convincing in it, and actually were whacked down earlier this morning by the 100-hour EMA, which is interesting. We did have some positive data out of Europe this morning. See, we had German retail sales stronger than expected, 0.4 against 0.2. That's yearly. Monthly German retail sales also stronger, 0.8 against 0.4. We are awaiting CPI out of Germany that is due out in about half an hour. So that could play into the euro, but we did have stronger data. We did see the euro sell up anyway. We'll see how that plays out. Dollar CAD, very clunky right now. You can see we broke down, we broke back above, we broke down, which means I'm just going to get rid of that line because it's obviously not doing anything. And I'm going to start drawing trend lines. Watch that going forward, and we'll see. Good luck the rest of this week. Enjoy your weekend, and I will talk to you soon.